Hey, welcome everyone. I'm Ted Earhart. Just want to spend a few minutes today talking about mortgage rates specifically. This kind of picks up on a series of videos I did in 2020 talking about this key interest rate relationship exists, which can tell us kind of whether or not mortgages are cheap or expensive on a relative basis, and kind of give us a clue as to whether or not rates are going to be moving up or down in the relatively near future. So we've seen a pretty big move here in 2021. So I just wanted to give you an update as to where things are at, especially if you're someone who's been sitting on the sidelines and wondering or not if now is the right time to get moving. So first of all, the most important thing to kind of understand here is everything is based off of this key benchmark interest rate, which is the 10-year U.S. Treasury note, or more commonly known as the 10-year government bond. And when we came into 2021, this key rate was less than 1%. And as I record this today, this is about a day old, the government bond, 10-year government bond rate is up over 1.5%. So on a percentage basis, long-term interest rates have jumped up by over 50% so far in 2021. Now, this matters because mortgage rates are highly correlated to the interest rate on long-term government bonds. And you can see that here in this 20-plus year data set. So graphed on top is the 30-year mortgage, graphed on bottom is the 10-year U.S. government bond, and you can see the relationship. It's plain as day. What we care about specifically as it relates to gauging whether or not mortgages are attractive is we want to look at the spread, which is the difference between these two interest rates. So the 30-year mortgage rate minus the 10-year government bond rate gives us the spread. And if we take a look at where that spread resides today, it's sitting at about 1.4%. And that matters. We can compare that to the long-term average, again, to gauge whether or not things look attractive or not so attractive. And the 20-year average between these two is about 1.8. So given that, today, mortgages actually look relatively attractive. And that is a huge change from less than a year ago when I put out the first video on this topic. We had seen a major gap out when the spread jumped up to, I think it was at the high, roughly 2.6%. So it was a huge gap relative to the long-term average. And that gap has completely narrowed as mortgage rates have gone down. And now we've seen government bond rates really pop up. So if you're sitting on the sidelines, you're kind of wondering, well, whether or not you should, to make a move on refinancing, I think right now is probably a good time to get moving because we've seen, again, the 10-year is on the upswing and mortgages tend to lag. And just that means, I guess it's not all that surprising that the spread is narrowed, but it's probably quite likely that in the weeks to months ahead, we're going to see mortgage rates jump up even higher. So that's kind of just a quick update as to where things are at with mortgage rates. If you like the video, I'd appreciate it. Drop me a comment or give me a thumbs up. And always, thanks for watching.